excited because there's a lot of interesting events that have happened in the stock market and the economy in the last month or so. May of 2019 was a wild ride for stocks, and stocks have quickly reversed course so far in June. Hi there, my name is Ashley Michikay, CEO of True North Retirement Advisors, where we help business owners successfully exit their business. And today is our monthly installment of our market and economic update for June 2019. And we have a lot to talk about, don't we?
Absolutely.
Yes, we do. So this is David Wilson, founder and president. He also happens to be my father.
We are seeing a slowdown around the world. We actually have a recession in Central America, Africa, parts of Asia, and it's very clear that China is slowing down. So we're seeing a slowdown there, and the latest GDP numbers indicate that in the second quarter, the U.S. economy is growing at about 1.4%. That's a big drop from the first quarter, which was unusually strong at 3.1. Basically, they're unsure what's going to happen. I mean, are we going to have a 25% trade war with China where you've got your goods that you're producing are going to have this big tax? So that might affect people, but it's just the ebb and flow of the economy. You know, we're coming up on the 10th year of the longest expansion in U.S. history. So, you know, I mean, the economy for different reasons slows down.
I think it's important to understand that the U.S. isn't as influenced by what's happening in other countries as the reverse in terms of the economy. So the world global economy could continue to slow down, and we could still be, you know, relatively immune from that.
I think we've got a good chance to grow between 2 and 2.5% on the year, and that would be very solid, and that would be a lot better than a lot of countries around the world. I mean, Europe has hardly grown at all. I mean, 1% would be considered pretty good for some of their countries.
Yeah, but they have other issues.
They have other issues.
Yeah. When you look at the numbers, the economy is still growing. Now, it may not be growing as much, but it's clear that the economy is still moving in a forward direction,
right,
and that we're not at a big risk of slipping into a recession anytime soon.
Right, but we had a really low jobs number. I think it was 75,000 for this last month, and it's like, whoa, wait, we're way under 100. You know, we were having like 150, 160,000 new jobs a month. We had 75,000. You know,
well, do you think that because of the worries about tariffs and these extra costs that businesses might face because of the tariffs, that they're reluctant to hire?
No, I think it's hard to find good workers. We had we had some major flooding that might have affected hiring some there, and sometimes these numbers get adjusted a couple months later. But I mean, it's enough where you can say, whoa, we don't want too much weakness in the jobs market. You know, there's still, we've got a record number of jobs available, but nobody to fill them.
Yeah.
So, but again, it's a seasonal thing, but that's enough to get the Fed's attention.
What do you think the likelihood is that they'll actually cut rates?
I think the market is signaling to them that they will cut a quarter point in July, and then I think they'll do maybe a quarter point in December. So I think a half.
The stock market was down, I think it was down 6%.
6.6% last month, yes.
And then it's up like 5%
in a week.
Yeah, in the first week of June. So
because the Fed chairman said, well, we may cut. And again, this is going from tightening to easing. The market anticipates that makes capital cheaper, that makes housing stronger, that makes you refinancing your mortgage. You know, I heard somebody said they had 5% and now they're at 3.5%. You know, those are huge savings.
Yeah.
We're only 2% away from the all-time highs. Yeah. And we're really in this Goldilocks period. That means we have really little, if any, inflation. We have growth, 2 to 2.5%. We've got an ideal stock market in those conditions because, again, I could put money away over here in a treasury and get 2% for 10 years, or I can be in a stock that yields 2% and could grow 10 to 15% a year for the next 10, 15 years. So the risk reward still favors stocks. That's why I'm still very optimistic about the second half, especially if the Fed cooperates.
Now is the time to be seriously looking at your mix of stocks and bonds, whether or not that makes sense, and reducing your allocation to stocks where and when appropriate, and also doing it at a time where the market is so close to its all-time highs. Now is a great time to do that.
It's just being prudent with your portfolio. It's not being greedy or being scared and being in the fetal position. It's basically managing your portfolio so that when we're close to the new highs, new all-time highs, that's the time to take a little off.
You have said that you think value investing is a very attractive area to invest right now. Let's talk about why you think that is.
One, it is at one of its biggest discount ever. I think it's a 31% discount versus growth. They pay good dividends. They're not growing at a very, very fast pace.
When the economy eventually does fall into a recession, when the market goes down along with that recession, value stocks tend to hold their value much better too. So
yes.
it's a protection, particularly for people who are closer to retirement, are already retired. It helps to insulate them from that wild downturn in the stock market.
Yeah. Now the interesting fact is, over the last 90 years, value stocks have done something like 13.5% a year versus 9.2% for growth. So over the long, that's 90 years.
Yeah.
That's the old Warren Buffett value type company. Again, but if you ask me the last 2 or 3 years, nobody wants to talk about it, which is probably the time to be investing in it.
A lot of interesting things happening out there in the economy, the stock market right now. But as always, it's important to emphasize there are always areas of opportunity no matter what is going on out there. And part of our role is to keep a good pulse on what's going on out there in the market so that we can do the best job possible in helping you make sure that you don't run out of money, make sure that you don't outlive your portfolio. And part of that is taking advantage of what's going on out there, but also protecting you as well. Thank you so much for watching today's video. If you like this video, please subscribe to our channel, which you can do by hitting that little subscribe button at the bottom of this video. Also, please like, comment, and again, subscribe. Thank you so much for watching. My name is Ashley Michike. This is David Wilson, and we will see you next time.
The thorn and the one rose.
Who's the thorn and who's the rose?
I'm the thorn, you're the rose.
You look like you
No, I know.
from the Mentos.
How about the bald and the beautiful? You like that one? No?
As opposed to the bold and the beautiful. My name is Ashley Wilson. This is David. I said Ashley Wilson.
Hey, you got to keep that in there. That is awesome.
Oh.
Ashley Wilson.
The young and the restless.
No, old. I don't know. What? Perfect. I love it.